Hi and welcome to another daily recap. I'm going to recap day 76 and this is August 12, 2024, Monday, a fresh week. And I'm starting from EU and there is no trades on EU. If I tell you the overall outlook of all the three pairs, that is EU, GU, and XAU, I have no trades in all of them today because since it's Monday and the price action was very consolidating. And one more reason is that there was no Red Bullers news today. So probably I think there was a bank holiday today. We don't know, but the price action was very dull and you know it rarely expanded a few pips. So let's start from the pre-session analysis. So what I analyzed and what I expected and what did the market do. So let's jump into the daily charts. Okay, the daily is swing bearish and this is a strong swing high, weak swing low. And if I jump into the current price action, this is the internal break of structure on the upside. Price has liquidated the strong swing high and it has made a bearish chop. Actually, it is not a chop. It just swept the imbalance here, and now the price is moving in sideways. The Friday was consolidation, and Monday is maybe could also be an inside bar. So there are two possibilities for the price to either go up or for the price to either come down. For going up, we can say that the price can follow this internal bullish order flow, and then price can go all the way up to this daily supply. Or for the bearish view, we can say that the price can come further down because price has swept a strong buy side liquidity and it has fuel to come further down also to fill this imbalance. So either way, there are two reasons for the price to go up and for the price to come down. So the daily bias is very much neutral for me. So jumping into the 4-hour time frame, the 4-hour swing structure is bullish. This is a strong swing low and this is a weak swing high is not yet formed because I need to see first an internal bearish internal breakout structure before jumping before marking the weak swing high. For now, this is the weak internal high. This is the strong internal low. This is not the strong internal low because price just liquidated it. It did not close below. And within this, since this internal structure is very large, so I just mark the small internal structure which is within this large internal structure. So this is the small internal structure which is bearish. So it's very clear that what we can expect today is, since the small internal structure is bearish, I can look to follow the small internal structure and expect this strong internal high, means strong internal low to be taken out. Why? To start the swing pullback. But the thing here is price has already reached the equilibrium point, so that's a bit of concern. So price can go up and take out the external high, I mean the strong high. That's one case, or the price can continue further down, making this as a strong high, and then price can take out that strong internal high. So anything is possible, but for now, let's look at the current price action. What's going to happen? So this is the uh, news candle of previous week, which pushed down with no lid. So this obviously would be taken out. But if I look closer, there was a pullback lid in the, I mean, a pullback inducement in the 4-hour itself. So this, so you can see this is a slight pullback, and the price pushed up, and again the price made a fake break, and then the price pushed up, took out all the buy side liquidity. This is a fake break before tapping into this H4PY. Nice, isn't it? Now, the price started to accumulate after tapping into this 4-hour supply, and there is buy sell liquidity on both sides. So, ideally, what to do? I'll be waiting for the price to take any of these liquidities, and if there is a strong shift in the order flow, I just look to follow the order flow. Or if the price takes out this liquidity and continue moving down, then I'll be looking to follow that bearish order flow or bullish order flow, whichever is seems perfect for me. Okay, the shorts are phase C and they are also medium probability, and the longs are phase B. They are also medium probability because price is not coming off from a high time frame POI. Okay, if I jump into the H1, H1 is swing bullish. This is a weak swing high, strong swing low. Internal structure is very much clear in the H1 and it is uh, bearish. So this is the current internal range that I'm dealing with, and this is the strong internal high, this is a weak internal low, and this weak internal low also seems to be the previous week's low. So probably when this is the previous week's high. So you can definitely tell the price is going to take which one of them, but definitely the previous week's low. So we can expect the price to come down. Not today, but anytime this week, we can expect the price to come down. So this is the buy side liquidity and sell side liquidity that I have marked in the 4-hour time frame, and this is the 4-hour supply, and this is the H1 supply. So my expectation was very simple today. I know that the price is going to target this weak internal low. So if I see a a bearish sweep zone, then I would be looking to enter the enter sells using that freshly formed POI. So that was my intention for today. So coming to GU, as I already told you, I had no trades in all the pairs. So in GU also there is no trades, but let's jump into the daily charts and see what the let's analyze the pre-session analysis and see why I didn't get any trades on this day. So daily swing is bullish, so the swing structure is bullish, and the internal structure is also bullish. That is the phase A2 is still active, and this is the fractal order flow. You can see the fractal order flow is actually bearish, and this supply is still in control. But the price has made a bullish chop, but still the shorts are probable because this supply is still in control. But what I could expect is price to come down, mitigate this daily demand, and then it can push up to take out all this buy side liquidity. So there is a ton of liquidity, and definitely I would expect the price to go up, take out all this liquidity, and then obviously target the weak internal high. If this was not there, I would have expected the price to take out this strong internal low to facilitate a pullback, deeper pullback. But since this low resistance liquidity was there, obviously the price would be magnetized towards this low resistance liquidity, and I'm expecting the price to move up in the following week. So this is the 4-hour time frame. The swing structure is bullish and the internal structure is bearish. So this is the current internal range that I'm currently dealing with. So let's zoom into that one. Uh, yeah, this is the IBOS, and here the price actually liquidated this low, and then there was a strong push up with no lid. And during that push up, it actually made a change in the character, a bullish change in character. But again, that was overruled by a bearish change in character. Again, there was a bullish change in character. So you can see the price is consolidating simply. But now the price was in the 4-hour supply. So what I expected is, price to come down to, fill this imbalance or to mitigate this 4-hour demand. So anything I expected the price to come down, or one more reason could be this internal pullback was over and then the price would come down. So there are a ton of reasons for the price to come down, but there are risk factors associated also. What whether price is coming off from the daily demand, there is a strong sweep of sell side liquidity and a strong push up, which means the demand is in total control of the market. So taking shots against the demand, it's like suicide. And one more thing is that this POI could be a reactionary point if the demand is in control. So I could easily take a loss and be caught in the wrong side of the market. So simple, wait for the lower time frame confirmation, the medium time frame confirmation, and then enter using lower time frames. That's why we got multiple time frames. So this is the H1. The H1 is swing structure is bearish, strong swing high, weak swing low. The internal structure is actually bullish, trying to make an internal the swing pullback. So this is actually the weak, the strong internal low. The weak internal high is here. If this weak internal high is taken, this would be my strong internal low. So price is currently in the 4-hour supply. It has not yet reached the H1 supply. So obviously, I would be expecting if the price takes out this weak internal high, then I would be waiting for a bearish stock to be formed, and I could look to play the internal pullback. So if and one more thing is that if this supply fails, then there is a high chance that this strong high could also fail because there is no other supply from which the price can react from. So all these are low resistance liquidity, and the price can easily take all these low resistance liquidity and take out the H1 strong swing high. Okay, currently I am just waiting for the price to develop more so that I can fix my bias. And one more thing is that the longs are phase C, which is low probability because price have already reached equilibrium point and there is this last level of supply which can hold. But the shorts are phase B, which are slightly high probability because uh, price is coming off from a high time frame PY. Plus, I'll be waiting for a medium time frame chalk. And yeah, I'm taking trades from the uh, premium prices. So phase B is a little bit valid, but also I must be aware that I'm trading against the internal structure. So aggressive trades will be followed by aggressive risk management. So that's what I'll explain you later. So yeah, this is what happened actually. The this internal strong low actually did not form because price just wicked this high and then tapped into the H1 supply. So which means that the strong internal low is still here. This is not a strong internal low, and this is the POI. Okay, this is the demand that liquidated that was having this liquidity and it swept liquidity and it was also formed during the session. So this could hold and make the price to continue, but for now we are having a strong rejection of the supply, which means the supply could be in control, and I was waiting for the bearish stock to be produced, and then if the price taps into this freshly formed POI, I would be taking the 2.5 hour trade, but I would immediately get into break even when the price taps into this 4 hour supply. This is at 10. Price didn't make the bearish stock. So I was waiting for the bearish stock to be formed. The price still did not make the bearish stock. I'm waiting for the order flow to shift bearish to take the phase B shorts. Phase C longs could also be as we are from the strong daily demand plus flow internal order flow. In the longs or shorts, I would trading only with the medium time frame chalk as there is mixed signals and I don't want to be caught in the wrong side of the market trying to anticipate the next move. That's cool, right? So price made a bearish stock. So in line with the medium time frame order flow, price coming off from the the H1 PY, which swept liquidity and it also has inducements, and it has made a bearish S&P divergence, and there was a bearish stock especially from PY. So I can target up to this Asian low at least. So KSP conditions, prices in the optimal trade entry point, there is a medium time frame chop, and there is the S&P divergence or a bearish S&P divergence when compared to the XY. And this PY has 4 out of 8 criteria met. So what are those criteria? It has swept liquidity, it has displacement, it has made a shift in the order flow, it is unmitigated, so it is totally unmitigated. It has an inducement. You can see these are the pullback. It does not have a lid, but it has pullback inducement. And yeah, it is actually stacked within the 4-hour POI, and it must have shifted the order block. So where it has shifted the order block. So this is the reactionary point. So if I move to the left, there would be another order block from which the price reacted from here and then pushed down. So it has also shifted an order block also. So only one criteria was not formed, but all other criteria was there to take the trade. So is it in line with the high time frame narrative? No, because high time frame suggests me that the price is reacting strongly off the daily and there is strong liquidation also and the price is pushing up. So mixed signals in high time frames. So I can't conclude that the high time frame is supporting this medium time frame idea. So it's still a medium probability trade for me. So what is the entry method that I'll be using? I'll be using LC1 M15 lid, LC1 to enter shorts. So what are the risk factors associated? Obviously, first one is there is no high time frame narrative, and the second one is I'm trading against a strong internal low. And also, yeah, this is an aggressive entry, so I would follow this with aggressive trade risk management, and I would break even once the price has taken out the Asian lows. So before entering the trade, you must also know when you're going to stop out or when you're going to exit the trade. That is very much important, so as I did here. So I know that once the price comes here, this POI is also high probability, and since the order flow is bullish, so this POI can hold and the price could move up, invalidating this POI. So once the price reaches this POI, immediately I would either take partials or I would be taking break even. But partials are not yet tested, so break even is the only option. And yeah, this is the M15 and this is the M15 lid that I was waiting for the price to take out. Price actually took out that liquidity, I mean that lid, but it took out the highs of this candle. So again, I need to wait for this candle to finish printing so that I can take the next trade using stop order. But at 130, I mean that 110, what happened is the price invalidated this POI and made a bullish stock. So my bearish idea was invalidated. So this was the freshly formed POI from which I can look to follow this small internal bullish order flow. But here is the thing, price already tapped into the H1 supply. So it was kind of risky, and I mean, there was a mixed signals for me. The intuition was trying to stop me from taking those riskier trades, but still, it follows my rules, right? I need to go against my intuition at some point of time. So this is the phase C. So it is a non-OTE. So price already reached the premium prices. Taking trades from here is less probability. And high time frame is supporting the medium time frame idea. Medium time frame POI as 4 out of 8 criteria met. Yes, it has swept liquidity. It does not have displacement, but it has made an out of flow shift. And yeah, it is still unmitigated. And it has an inducement. I'll show you it has a pullback. It has a lead in the M15 and it is formed during the kill zones. It's obviously London kill zone, and it has also fit an order block. So this is very minute. So this is an order block, and price reacted from there, pulled back, and then pushed up. But so the entry method would be LC1 using M15 lid. And what are the risk factors? The risk factors are the extreme demand is yet to be mitigated. So here is the extreme demand. So and there is a ton of low resistance liquidity here. So price can just push down, mitigate this extreme demand, and then it can push up. And this is just 8 minutes to go before the New York Stock Exchange opens. So once the stock exchange opens, there could be a ton of liquidity, ton of volatility. So those volatility could push down to take out all the sell side liquidity and tap into this demand. Again, the price can push up. Or the price can just use this sell side liquidity to come and take out this strong internal low and then start the deeper internal pullback. Sorry, it can take out all the sell side liquidities and then it will push up. So the extreme demand is said to be mitigated, thus the price should come down when the New York Stock Exchange opens, taking out all the sell side liquidities. Long should be high probability if the H1 supply failed. H1 supply failed, but the price is not yet fully mitigated the supply. Thus, the price could turn down anytime as there is ton of sell side liquidity. So this is 2:30, and the price still didn't mitigate the H1 lead. So obviously, I had to cancel this trade because just two more candles was left at that time. So obviously, I would definitely, even if the price mitigates, takes the lead. So only two candles are left. So obviously, I would know that the price would not take out this lead. So I just left the test, and the trade idea got invalidated. Thank you, guys. Let's see on the gold what the gold got for me. Let's see what gold has for me. Yeah, let's jump into the gold versus USD, and also there is no trades in XAU. So let's see what I did in the pre-session and actually what happened and why I didn't get into trades today. Okay, this is the daily chart of the XAU. So the price, uh, the swing sector is bullish, and this is the weak daily swing high. This is a strong daily swing low, and this is the bullish internal structure, and this is the demand which the price respected and gave a strong reaction on the upside. And also there is a this Morboso bullish Morboso candle. So what I'm expecting is price to at least fill this daily fair value gap and then push up, and obviously take out this weak daily swing high. So for now, today I was expecting the price to come down to take out to fill in this daily fair value gap. So this is the 4-hour chart, and the 4-hour swing structure is bullish, and the internal structure is bullish. The internal structure was actually bearish. Uh, this is a failed phase A because the price was came down. This was the internal structure that was bearish, and then the internal structure shifted to bullish, and then again the internal structure shifted to bearish before taking out the weak swing high. So that's called failed phase A. So I'm expecting the price to return, uh, make the internal structure bullish again, which can also there is a kind of equal highs here. So I'm expecting this strong high to be taken, and then they continue that bullish order flow and take out this weak swing high also. So jumping into the zoomed version of the 4-hour chart, this is the current internal range that I'm dealing with. So the price is now pulling, going up. I can also say pulling back towards the premium prices, and it has mitigated the 4-hour supply. Uh, for technically, I can say that this is the strong swing high, and this is the strong internal high, and this is weak internal low. But I know that this would be the weak structure that would be taken out because the high time frame bias tells me that the price would go up to take out this 4-hour weak swing high. But for now, there is a kind of low resistance liquidity being formed. So what I can expect is the price can respect this 4-hour supply, and then it can push down, take out all these sell side liquidities, and in fact, it can also come down to this order flow and then gain some uh, pending buy orders, and then it can push up. So that could also be the case. If that's the case, then the bias would be bearish today. So this is H1 chart. H1 is the swing structure is bullish, and the internal structure is kind of bearish, but I can take this as small internal structures and I can play the small internal order flow because this internal structure is very large. So large internal structures mostly kind of fail. So I'll just be following the current price action. So if I zoom in, yeah, this would be my current internal range, and this is where I mark the small internal structures. They were bearish and now they are bullish now. So this would be my small strong internal low. This would be my small strong internal, sorry, small weak internal high. And this is a daily fair value gap that I was talking about. So what I can expect today, I can expect the price to come down to what? To take out the low resistance liquidity that was building up in the 4-hour time frame and also to fill in the daily fair value gap. So the high time frame is clearly stating me that the price is going to come down, and also in the medium time frames, the price is in the medium time frame POI. So all I can all I can wait for is just the price to make this a bearish chalk, or even the price can take out this weak small internal high, and then if it can make a bearish chalk, I would be looking to trade from the freshly formed POI and then target this daily fair value gap. So that's all I want from the price to do. So that was the development that I was waiting for. So longs would be definitely low probability because of this H1 supply. So if this H1 supply fails, then I can rethink, and then maybe I can look to take one aggressive entry. For some of them, they can see that the price is trending above and they can take these shorts. But still, this one leg, which is the uh, selling leg, that is the supply leg, is still in control. So only when this strong internal high gets taken off, which means the buyers have stepped into the market. So until then, I'll be very cautious and not to buy. So I'll be still looking for sells. So this is at 8 to GMT. So price took out this small weak internal high, and yeah, the only thing that I was expecting is price to make this stock or take out this strong internal low. So yeah, price took the weak small internal high, and the bullish order flow continues. I'm not interested in longs as this bullish order flow is a low resistance liquidity. Oh, yeah, it's a low resistance liquidity in 4-hour time frame, and the price is in the H1 supply also. Longs would be high probability when the 4-hour supply fails. Until then, I would be looking for the price to chalk bearish and take shots. But you know, again, this supply failed, but then I realized there was one more supply there. This one is a very much strong supply because you can see the rejections coming off from it and the inducement that it has. So this could be a strong supply, H1 supply. So I was waiting for this to fail to take longs, or this could be respected and the price could chalk bearish where I can take shorts. So I would be lot convinced to take shorts than to take longs at this point. And this is at 420, I mean 220 GMT plus 1. The price actually made a fractal pullback and then pushed up. So I was expecting the price to push down, chalk bearish, fresh PY, boom. So plan was very simple. I was waiting for that chalk bearish to happen, but it didn't happen because it was already 420, and this was the last candle that was forming. So even this chalk bearish, the next candle I'll not be trading because that will be out of my session. So that will be New York lull period, and that's also the London close. So I usually trade the London session. So for me, session got over right in front of me. So since I am trading H1 chart, so I can easily predict whether I'll need to sit for extra 1 hour or I can leave 1 hour before. So at 2, I can decide whether I'll be sitting till 3 or I can leave at 2 itself. So that's the advantage of having H1 chart right before me. So I know that the chop will not take place. So even if the chop takes place, price needs to come again back. So that will take two more candles. That's 2 hours our time. That will definitely not happen within the 40 minutes of the session. So off the desk with plus 0 hour. Yeah, but actually the session was good. Like my bias was clear. So there was no mixed signals in the session. So it was a peaceful session overall. And I'm off the chart with plus 0 hour. Thank you guys. Overall, as I already told you, I didn't get any trades today. So it's plus 0 hour overall. So since it's Monday, it's a dull day. So maybe Tuesday, Wednesday, and Thursday. Tuesday would mostly be the manipulation day, and Wednesday and Thursday would be the distribution day, and Friday would be the settling day. Anyway, let's not complicate too much. Let's just follow the current price action and the market structure, mark some supply and demand, and take some trades. That's it. That's my plan. Okay, guys. See you tomorrow. So for gold, I'll be still be looking to take shorts until and unless the strong internal high has been taken out. Okay, that's it for today. So see you tomorrow, guys. Bye.